this episode of Derek Invest. I'm your host, Derek Miller. So listen, this is not 2008. All right. Everybody is afraid this morning, it seems. Okay. My students are not afraid. Why? Well, we've been reviewing this stuff over what it looks like when a global economic downturn is happening, how that is set up, what that setup looks like. In fact, I just did this on Friday because, as I've been talking about for months, all of this trend following, algorithmic trading, machine trading was going to lead to days like this. This was inevitable. And that is why I have been running a neutral portfolio that has as much long and as much short. Does that mean I don't make money when the market's going up? No. Go look at my accuracy. Go look at the stuff that I picked for short. I mean, it doesn't take down markets to have short positions that make you money along with long positions. But those short positions, they will save your butt now that we live in this new world, because when you have a day like today, you're not panicked. Okay. But let's just get back to the matter at hand, and then we'll talk about that, because there's a few things you need to do right now. And the first is calm down. All right. This isn't what it appears to be, because this is price action. All right. Let me tell you, and I tell my students this all the time, price action manipulated at high speed with high volume is either used to institute greed and fear. And the fact of the matter is, this market has been running on greed for a very long time, and it's very, very easy for a true professional to have seen that this entire time. You're mocking Charlie Munger, you're mocking Warren Buffett, you're mocking all these guys, and their levels of cash are through the roof. Why are their levels of cash through the roof? Because we're gapping up to new highs. And when you gap up to a new high, this is one of the greatest ways, this is one of the greatest tactics to institute greed, excitement, FOMO, call it what you want, okay? What's a great way to institute fear? Contrarily, huge gaps down. All right. So let's take a look real quick. Let's revisit why this is not 2008 and what 2008 looks like. So for those of you that are just tuning in this morning, you can actually see it. All right. And again, stay calm right now. This is not the time to get panicked. Sorry, that's my light. That's the guys mowing the golf course behind me. Let's go ahead and screen share this so you can see for yourself. And I think Bitcoin's going to come up. So a lot of you crypto guys are going to be afraid too, but I've been discussing this with you as well. Since those ETFs came out, I've been talking to you about the volume that was sitting up here at these highs. This in crypto, for example, this looks a little different than it does in the stock market. I will talk about that today as well. Let's head on over. Let's take a look at what a global economic downturn actually looks like, so that you can see the setup for an actual economic downturn, and not what we have today, which is, very scary price action. I mean, very, very scary price action. I'm not downplaying how scary the price action is, but let me show you what a setup for a true market slowdown looks like. Here we are in 07, okay? We're going to roll forward. This is volume at the bottom, everybody. This is volume. Whoops. I hate that I just accidentally bumped that. I have to scroll back. Sorry. All right. Let's scroll back to 07. Volume is right here, and I apologize if I'm not as entertaining as some of these young guys, but I'm gonna teach. I know what I'm doing a hell of a lot better, and so that's what really matters. And that's the funny thing about the new social media trend. It's all about the guy that's the most entertaining, and the thing is, this is your money. You don't need entertainment with your money. This is what it looks like. This is just February of 07, okay? Do you see the jump in volume? This is where real fear comes in, all right? And then it runs. Look at that. From '07, look how far up it still runs. But see how the volume stepped up and it never really gave in. If you look at the volume back here compared to the volume of '07, '07 never dropped volume. From February of '07, volume went up and just continued. And look at it. It just continues and continues and continues until you get to a point where it is dwarfed. And this is, I just did this on Friday, so I don't want to do this too much. This is July and August of 2007. And even this volume, see how big that volume looks compared to the volume in the background? Watch this, though. Here, let's put a rectangle here so you can remember where that is. All right. And why does volume matter? Volume is trading activity, and trading activity indicates the real fear levels of the people, the institutional money, the people that run the world, and where they have their money, where they put their money, and what they're doing with their money. Look what happened to that volume. Look at this. See that? Now you start stepping into late '07. That volume's dwarfed. It's nothing. Volume picks up. Look at that. This is still 2007, folks. This isn't 2008 when the crash happened. Look at how much this volume has shrunk. So let's go into this one now. Again, so this is huge. Volume still has not shrunk since 2007. And guess what? What are we doing, everybody? What's happening with price? We are bouncing around at a high. Look at this. Look. You're bouncing around. You see that? Now scroll over. Oh, here we go. Now we've hit 08. Or is it December? Look at that. See in December of '07? How long did it take to get there? It took from May of '07 to December of '07 on just volume levels. Look at the way the volume picks up. Look at this. Normal. Whoa, what is this? Holy smokes. At high prices. Whoa, what the heck is this? Again, at those same high prices, everybody. Oh my gosh. Here we go. We're in January of '08. Look at the volume still. Look at the volume. May of '08. Oh my gosh. June of '08. August of '08. Boom. Look at this volume. Look at the volume. It's incredible. And the low was March 9th. Right there. But that is what happens. This volume back here, actually, all of this gets absolutely dwarfed. This is in '07, everybody. This is when those of us that knew we were doing were getting out of the way. All right. Including Warren Buffett, by the way. Just FYI about Buffett and everybody who just claims like these old guys don't know what they're doing. Believe me, they know what they're doing. Now, I want to walk you through right now on the S&P 500. All right, here we go. This is taking you back. It doesn't matter. We're not in this scenario. This is February of 2023. Watch the volume at the bottom as price goes. Is volume doing anything? Nope. Maybe you have a minor adjustment with that bar right there, but nothing that matters. Nope. And here we are. And this is what I've been warning everybody about right now. There's just a lack of interest at these high prices. And there is a genuine lack of interest up here at these high prices. I mean, no one was interested. I've been talking about this. Same thing for the NASDAQ. Look, you see the volume here? There's just no interest in prices at these levels. Nobody was buying at these levels. And now you're just returning to a previous resistance level, very normal. Um, and it looks like it'll be on absolutely screaming volume. It looks like it's going to be, because you're down here at 420, 422 and a half. Okay. So you're almost heading to the next support level. If you zoom out a little bit, let's zoom out a little bit on a weekly chart. You see what that weekly chart looks like? This is just a lack of interest in price. Okay. Let's roll it over. Let's zoom in just a little bit. I mean, the reality is down here at 400, which I have been talking about for a very long time, and for a long time in the market, it's been about I don't know, a couple of months. I've been talking about the 400 level. Absolutely needs revisited for this to be a healthy rising market. And the way the trend followers are going now, I'm going to jump out of this share. I hope that shows you the difference between a 2008 and a now. I hope that shows you a difference. Okay. If any of you have been caught with your pants down in this, like, this is brutal and absolutely miserable. Sun's coming up. It's beautiful. I love it. Um, um, for those of you caught with your pants down in this, and you are right now saying, what do I do? Well, the first things you do is, one, you calm down and realize that it's not 2008. It's not 2008. Wicked price action. Wicked. I sound like I'm from the Northeast, like I'm from Boston. That's probably a terrible accent. But you don't panic. This isn't 2008. Massive price action with a lack of volume at highs is traditionally nothing more than massive levels of fear, right? They're going to talk about liquidity, unwinding leverage. There's going to be all sorts of conversation today. The truth is, this was identifiable. Do not let yourself off the hook, okay? On Friday, I was calling for on the QQQ that now sits down at 4, whatever I just said. It's roughly 425. That sits down at 425. I was calling for a 450 level. My goodness, that we hit. We hit it Friday because we hit like 446 and a half. And I said, that's it. Close your shorts, sell your puts, buy. And listen to me. I stand by what I said. However, you have to understand something. I was short that entire time. So it went from 505 to 446 and a half. I was short. Okay. I run a neutral portfolio. So I'm long and I'm short all the time. All right. And what am I going to do this morning? I'm going to build on that long position. Now, if you're not doing these things and you're following someone that's like NVIDIA and Amazon and Apple, and I know how many of you guys are, because I watch Twitter every day and it blows my mind at what's being considered an expert. But it's always blown my mind. I've been doing this for 25 years. All right. I mean, I saw people talking about that they're professional futures traders, and that they were down 200 basis points already in their futures account. And some of you are following this human. Are you out of your mind? I am a futures trader too. And guess what I'm going to do with futures this morning? Nothing. Why? There's way too much risk right now. Are you out of your mind? I'm doing nothing with futures this morning. You have to let things like this settle out a little bit. Do you know what I do in the first 15 minutes of a futures account every single morning? Nothing. I do nothing. That's a boxing match, the first 15, sometimes 20 minutes. There is no reason to be involved in that mess. Let them fight each other out and burn each other and hurt each other and, give each other swelled eyes. And then once that's over, you can clearly see the trend of the day. You jump on it. You grab your 100 basis points. You grab, whatever. I don't know what your marker is. And then you just move. And then you're done. But don't get involved in these boxing matches. And for these guys that are saying that none of this was something that you could see coming, that's not true at all. This is exactly what you're going to get with all of this massive trend following. Okay. Now, I've talked about AI before, and they were comparing the AI to a bubble. And so I did a whole series on why this AI move isn't a bubble. PEs are nowhere near where they should be. Optimism's nowhere near where it should be. Now, I've also told you that I don't believe AI is 1/100th as powerful as claimed. And I stand by that. I don't. And I also stand by the fact that it takes, in many circumstances, it takes jobs from human beings. I don't care if it's a call center in the Philippines, or if it is some accounting guy that would be sitting there going through transactions in the United States. People need jobs. Humans need jobs to survive. Oh, no human wants this job. Let me tell you something. Just go meet a guy who has a family and has been out of work and ask him if he'll take that job. He will. So, and I digress by saying that, but I want that to be known. That is my opinion. But I also don't believe it's anywhere near as powerful as you're told. I don't personally believe that the internet does exactly what people tell you it does. I think a lot of it is not accurate. Okay. And so let's talk about the next thing you do. So now we've realized it's not 2008, and you should go watch my lives from Friday if you need to revisit this subject, because I go in depth for 30 minutes and I show you charts of now and then and this and that, because I've been waiting for something like this to happen and am more than prepared for it with my students. This is not anything that blows us away. We were ready for this. We were prepared for this. You should always be prepared for these types of things when you're in a market like we're in. And if you caught with your pants down, realize it's not 2008, calm down. What happens if you've already got yourself buried in this trade? Well, I hope you had proper cash management so that you can continue. I hope I warned about this buying the dip mentality that you run out of cash. I hope that's not you. And I hope that you can buy into this, because the one thing I'll do this morning, and again, I have a long portion of my portfolio and I have a short portion of my portfolio, meaning long-term and short-term, to take advantage of gains, right? And my students do too. This is what I teach. So hopefully that you only need to go over to your short-term money. And what you should be doing this morning is you should be building into a long position. Hopefully you're not just, you should always be running a portfolio with nearly 50% cash in it, especially in markets like this. And know that will not harm your investments. You will do very, 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 very well. You don't need nearly as much invested as you're told. So don't let yourself off the hook. That's my second piece of advice to you. One, realize it's not 2008 and calm down. Okay. Look back at what you did wrong. Two, don't let yourself off the hook. If you're caught right now, do not start making excuses and saying how nobody knew this was coming, or you meant this or you meant that or whatever. Just admit where you went wrong. Okay. That's the second piece. And the third piece is make the big adjustment that you need to make. If you were being greedy and you were just riding this trend and you thought you knew what you're doing, and all of a sudden your Fibonacci doesn't mean anything and your moving average doesn't mean anything. And this is what I warn about with indicators. They mean nothing. They're nothing. They look backwards. Okay. Those indicators are lagging indicators. They mean nothing about future price. They forecast nothing. Now, if you can accept that, and you can realize this isn't just a one-off. This isn't some fluke. This happens all the time. That's why guys like me that have been doing this for 25 years are always preaching this stuff. And there's not many of us, because a lot of guys like me don't have an interest in helping others succeed. They just make themselves succeed and they avoid the drama. I am trying to help others succeed while I succeed. So understand, okay, I had it wrong, right? I was told it worked. It's been working for 4 years, but oh my God, I am down 700 basis points in my futures account. I've just blown up every option contract I own, or whatever the case is. And now start to figure out what you need to do. Now, what I do and have been doing for 25 years, and please feel free to scroll through my Twitter. Here is my Twitter handle. I never changed it from what Twitter gave me. It's just Derek Me 752-63605. I never changed it. There's my LinkedIn, Honest Trader, my email, dmiller@Promethean Investing. Start to understand that you need to understand the 3 pillars of investing. Okay. All 3 pillars: risk management, cash management, and investment management. For example, some of you that are in options and futures don't belong there. You're not ready for that yet. That's investment management, okay? What type of stocks are you ready for? What should you be invested in? That's the investments themselves. Like, for example, if you were not knee deep in 20-year treasuries right now, I don't know why. I have from 2 weeks ago or 3 weeks ago, and feel free to pull it up. I said there was the biggest move by professional and institutional money managers into the 20-year treasury that I've ever seen. And if you look at the ETF TLT, I say you should be buying this thing by the truckload at 91.80. I think it's sitting at 98.80 right now. And that has nothing to do with this morning, because I'm not looking at futures of the 20-year treasury. And even if I was, I couldn't equate that to TLT. Let me see if there's any pre-market trading on TLT, and I'll show it to you. I have no idea. I have not looked at this. I do not know. Let's take a look. So NASDAQ's down 526, 425. Let's go to TLT. Now, this is what I mean. Okay, so pre-market, it's up 1.5. So it's almost at $100. So I don't know what it was, like mid-July, with 91.80. It's obviously somewhere right in here, right? So when I tell you that my portfolios are neutral, for example, on this, I think you get like 4% from this as well. And it's now up 10% from where I bought it, 9% from where we bought it. I'm not telling people to miss out on gains. I'm not telling you to play it safe like you're a retiree. I'm telling you, be intelligent, move where the money moves in a market. That's what you should be doing. For example, the sun's coming up, so I really have to try to keep this motion detector light on. On TLT, let's run back to it. Let me show you something. Remember how we were just looking at what it looks like when there's a crash in the market and all that volume sort of blows out the previous volume? Well, this is TLT, and it came from like 180 or something outrageous. There it is right there. So here we go, 172. This is back in June of 2020. By the way, I have not bought this or owned this until it would hit $91.80. So we're going to go, what we're going to watch is this volume. Okay, it looks like there's an increase in volume there. Still going. Volume's pretty steady, right? I mean, that's pretty steady. Wait, there's something. This is something. What's that price at? 84.26. Isn't that interesting? All of a sudden, there's a mountain of volume. Now, this resembles 2008. 2007. The only difference is this is after price has fallen from 180. And look at the volume, absolutely dwarfing the background. Now, it'd be one thing if I hadn't been sitting here telling you to buy TLT for the last month, but I have been. And I myself buy it for my own portfolio. And look at volume. That is the reverse of 08. That is after the market has dropped 50%, 60%. And now here you sit. You're right here at 99.64. All right. So while you don't want 2008 and 2009 to happen, you look at this. Watch this. Look at this. This is August of 23. Ready for the volume? It is not a little thing that occurs. Look at that. Look how it adjusts volume straight down. That's how much volume stepped in September of 2023. This have been getting involved in since September of 2023. Or no, not professional money managers. That's the wrong way to put it. The intelligent guys, institutional money, the guys that run the world. This is where they're putting their money. This is where they've been putting their money. So don't listen to anything about the U.S. collapsing. I assure you, they wouldn't be putting all of their money into the 20-year U.S. Treasury if their concern was a U.S. collapse. Okay? Now, the key to all of this is that you now make the adjustment and understand I have been following. What is going on here? It's not working. I have been following the wrong guys. That's all. Look, I wasn't set up for this. I should have been. There are people out there that did see this coming. This wasn't a hidden thing, right? You could have been buying that treasury, right? Don't compound your mistakes right now, though. I'll tell you that. And a lot of guys, don't buy this morning. It's too scary. If you are stuck in this, if you had nothing on the downside, and the market is now down 10, it's down probably about 15% from the highs. You have to buy if you're stuck in this trade. Because the market is going to rally back to the Qs at 490. Now, your downside right now is at least 400. Like at least 400, possibly, because trend followers are funny creatures. And shorts and put guys are funny creatures too. If anybody was short or had puts coming into this, and a lot of the guys jumped in way late. I saw them jumping in on Friday. They're going to claim that they were heroes, but they'll miss this whole thing anyway. They won't close out. They'll dog pile on, and the closeout could cause a spike to 490 in the next week. That's the truth. And also, that may not be what happens. But your portfolio can be set up for that. You have to understand the 3 pillars, though, for yourself. I put out a lot of information on my Twitter, and my accuracy rates are very, very high for a reason. What I do transcends noise, okay? I can call bearish stocks in industries and sectors in very strong bullish markets like the one we're in right now and be right consistently, and I am. Please scroll through my Twitter because I know what to look for. The same thing with being long in bear markets. I know what to look for. Now, bear markets are tougher because bear markets are far more brutal. But you have to understand cash management, risk management, and investment management for yourself. My mentorship course starts in 2 weeks. If you were caught with your pants down right now and you are not in my mentorship course in 2 weeks, I cannot understand why. Go through and watch what I've been putting out for the last few weeks, last month, and it's not bearish. Not at all. Not at all. What it is profitable. I have things that I buy. I have things that I sell. I'm in futures. I'm not in futures. I'm using options. I'm not using options. It is all determined on the market itself. Okay? I have been managing money professionally for 25 years, and I have an edge on guys that sat behind desks and didn't have to talk to clients. What they don't understand is how a client's mind works, which is how a retail mind works. They only understand how professional minds work. I sat with both for 25 years. I have sat with retail clients and institutional clients. I know how retail's minds work, and I know right now there is the maddest, craziest panic. Whereas with professionals, they're panicked too, but just because they're taking a loss, and professionally it's not good for them, and they have to figure out how to get this back or where they think it's going to go, how to reduce risk, those sorts of things. Whereas retail right now is saying, I've just cost myself my college fund, I've just lost my home, et cetera, et cetera. None of those things are true, by the way. And that's why I say the first thing you do is calm down. Now, if you're looking for the guy that's going to make you feel better about all this, so you didn't make any mistakes. I'm the wrong guy. I'm not David Goggins of finance, right? Like, I'm not going to be like, come on, motherfucker. What are you doing? You dumb son of a bitch. But I am going to tell you that if you're caught with your pants down right now, you're going to have to recognize this mistake. It was your mistake. You didn't need to be in this position. There are a lot of ways right now that you're avoiding this morning. This morning is very profitable for me. And I'm not some guy that was like, 100% short or 80% short. I'm just about market neutral, right? And part of being market neutral is owning a 25% position in the 20-year treasuries. And I just showed to you why you would do that. It's not like this is hard to find. And you can go back and look and watch my live videos going through that treasury, telling you what to do. All right? It's there. So anyway, listen, if you're interested in my mentorship, you can get through it on Twitter. If you have questions for me, dmiller@prometheaninvesting.com. Now might feel like the wrong time to be talking about this. Now's the right time to be talking about this. And now's the right time for you to accept that, hey, look, maybe what you were doing didn't work. You were heard all about Fibonacci and moving averages and stochastics and RSI, and it seemed to work perfect, right? That's what happens in rising markets. Everything works. But now you have to realize, okay, I have to make adjustments. All right, guys, listen, remember, if you're not good up here, you're not good anywhere. Don't get all depressed today. Today is a time for action and reflection. All right? Get outside, smile, fake it till you make it if you have to. Some of you guys will have to. You'll have to kind of look at the consequence of your actions and make adjustments, which is fine. I've had to do that my entire life. I'm 45 years old. I'll be doing it for the rest of my life too. The difference is I do it. I accept when I'm wrong and I do something about it, and you should too. And I'm on here, so I know a lot of you need this. Not a lot of you, most need this. All right. Thank you so much, guys. Remember, every day